If you were to look at 2019, as far as the mobile money ecosystem and mobile money industry is concerned across the globe, we can clearly say that it has been a watershed year. And why do I say that? It's for multiple reasons. Just look at the data points. We are now talking about 1 billion account holders registered across all the mobile money service providers, which itself for me is mind-blowing. A billion plus accounts, which was clearly not something anybody of us would have thought of a few years back. Now, more importantly, out of the billion accounts that we're talking about, 37% are actually 90-day active. So a 90-day active is a good indicator to say how people are behaving, how many times they're using the account, and up from something like 25% 5 years back, a 12% increase is something clearly indicating that customers are beginning to see this as a service that is benefiting them. This is something like a main account for a lot of people across the globe. So the usage clearly is also manifested with the fact that we had something like 37 billion transactions last year. Again, a superly big number, and all this cumulating to something like $690 billion of value, or what's called the throughput or money flow into the system. What it clearly indicates is people are depositing money and using the mobile money services to meet a lot of their requirements, which we'll come to in a minute. But what is even more heartening to me, a mobile money system is typically not an island in itself, but an ecosystem of sorts. So it's really about how do I get money into the account, and then how do I make payments for various requirements of mine, be it sending money home, recharging my airtime account, paying for a merchant transaction, or paying my utility bill, like recharging my electricity meter. If you were to look at it, the sheer number of ecosystem partners being integrated into the mobile money ecosystem is something truly wonderful. We're now talking about an average. If you were to look at 270 service providers across the globe, on an average, each service provider has 98 integration points, in 98 ecosystem providers plugged into the platform. Right from, as I mentioned, electricity bill, it could be a recharge, it could be a government, it could be an enterprise wanting to pay for salaries. So the sheer number clearly means there are so many areas and places where a customer, a business, or a merchant, or an agent can transact electronically. That is clearly manifested in the point in the data point that of the total digital money or rather the mobile money transactions that you see right now, 57% are actually fully digital. What it means is the share of cash in and cash out has now come down significantly, and the money also enters electronically, like it could be a subsidy, it could be a salary payment, or it could be an international remittance and getting into the account of a customer. Now, once the money comes in, clearly there's a lot of what we call revolutions within the account, right from sending money home, as I mentioned earlier. So as and when the more turns in the account and within the platform, not only are you eliminating the requirement for having physical cash, but also gives so many revenue opportunities for mobile money service providers. And in the 2019, again, this is very important, that it's finally a business for a lot of these service providers, and 60% of all mobile money service providers have been EBITDA positive, which indicates that they're seeing this business as an independent revenue stream which could be profitable. And once it is profitable, logically you will see them investing in it. And when we see people investing in it, you will see more services coming through, and it becomes a virtuous cycle that more services being introduced, more transactions, more customer adoption. All of this will clearly see that we're making a difference. The mobile money industry is making a difference and impacting people's lives, and that is something to really take note of. So the COVID situation is something that nobody anticipated. Clearly, it has been a black swan event, and clearly the term is cannot be more apt for the current year. Everybody has been wondering what's going to happen to the industry across, what is going to happen to the economy. One thing which is clearly come out is digital is going to be the new normal, and the mobile money, the financial services industry, whichever is focused on digital, is clearly going to make a difference, because that's the only way you can service customers, and money is finally required for people. During the COVID year, we've seen every stakeholder within the industry rising up to the challenge, figuring out and tweaking and making changes to processes and ensuring customers, be it consumers, agents, businesses, governments, everybody is not affected, and really trying to ensure the requirements and needs of all these stakeholders are met. Now look at the regulator itself. I was so heartened to see many regulators across the globe changing regulations for KYC, making what is called the light KYC, to ensure more customers come into the digital financial services ecosystem, and people could open the mobile money accounts in what is called the self-service mode now. Look at Egypt. They came out with this regulation, and suddenly we saw something like 1,200,000 customers being onboarded pretty much in a month or so. It's like a 15 to 20% jump in the overall number of customers in that country. So clearly there was a need felt, and customers with the modified KYC could easily self-register themselves from their phones, and they could start using the account and start transacting. So that's a phenomenal move from the regulator's perspective. Secondly, the industry came together, and in a lot of transactions have either reduced or actually made transaction service charges free. It's the time when you need to stand in solidarity with people and ensure their lives are not affected. What has clearly happened is, if you look at Airtel in Africa, the transactions went up by over 15% in a quarter's time. So clearly, you saw customers flocking up to ensure they're able to meet their requirements through mobile money services. Third, a lot of aid started coming in, both from the government, but also various other bodies to ensure that people's lives are not disturbed. Look at Colombia. The government started funding and giving aid to families, and in the case of Mobile Red in Colombia, they've serviced over 15,000 families where they transferred this aid money into the mobile money accounts. In Uganda, for example, a lot of crowdsourcing initiatives have happened where people could give money as aid to various agencies, which could then have been distributed to people who are in need. So clearly, across the globe, you've seen multiple ways in which the industry has come together. Now look at India, and that for me is a phenomenal case study. We had a lot of reverse migration where migrant workers went back home because of not only have they lost their jobs, but there was no way they could afford to stay in a city and their families being in a village. So you saw a lot of reverse migration. What did the government do? There was a lot of aid that the government gave. How did it be disbursed? It went into bank accounts, what is called the Jan Dhan or the financial inclusion bank accounts, while typically not a mobile money service. It's something for the financially excluded. And how do they take the money out? It's through what's called the micro ATMs, where people use their national ID, the Aadhaar system, with their biometric. They put in their fingerprint, for example, authenticate themselves, and the money is given out. While all financial transactions in April, for example, in India came down, including the much talked about UPI transactions, in the context of AEPS, the Aadhaar enabled payment services, we saw the transactions increasing, which clearly means there was a need for money, and the government stepped in, found out how to ensure that money is disbursed. So these are the ways in which various government stakeholders have come in and ensured that the people's daily requirements and needs are met. For me, the biggest upshot that I would take is that the number of customers who would be doing digital transactions for various financial requirements of theirs is going to be sustained even after the pandemic gets over, and you would hopefully the world normalizes. But after seeing the easy, convenient way of managing transactions, I'm sure customers would stick to financial services like mobile money or any other digital channels. And even if they're charged, clearly they would believe that this service would make a difference and would make sense to them. And I genuinely believe once you start transacting digitally, we're going to be walking towards or going towards a financially healthy world. And while the world grapples with other health issues, financially we're clearly going to see a better world in the future. Like any other organization, Comviva has been as affected by the pandemic and the disruptions it posed. We had to get all our employees working from home during the second or third week of March, and it was a big disruption. We had to organize laptops for every employee, a VPN connection to ensure they're able to access the Comviva data centers. Suddenly, working from home, where teams were distributed and working only through either calls or online virtual meeting rooms, was not the easy task, and it took time for people to start getting adjusted. But while this process was happening, we saw the requirements from the market coming through significantly, where we had to really react to ensure the disruptions to customers and businesses was minimal, which meant that we had to react really quickly and come out with new services or modify the processes to ensure our customers are able to meet the requirements of the market. Simple example about Egypt modifying the KYC guidelines meant we had to come out with a new workflow and a process. We ensure that was done in under a week, and suddenly you saw 1,200,000 customers being onboarded. If you look at another example of one of our customer wanting to ensure airtime recharges are done seamlessly, and as customers couldn't go onto the street and go to agents where they could recharge their airtime accounts, we came out with a new service. That was rolled out again in under a week's time across 10 countries. I'm really proud the way we reacted to the market requirements. People worked 24/7. We ensured that the disruptions for the regular systems didn't happen. Most of the systems were pretty much working with a 4.9 uptime. And when transactions were hitting through the roof, systems could have misbehaved, but with proactive support, we ensured that none of our customers had disruptions, and that meant that their customers could have seamless access of transactions, and that is reflected in the overall surge in transactions and the revenues our customers have been making. Yeah. If one were to ask what next for the mobile money industry, if you were to look back over the last few months, clearly the number of transactions, the number of customers who got onboarded has increased significantly. What it means is there's a significant opportunity and area for which, if focused right, the number of transactions could clearly skyrocket. But more importantly, I believe that service provider could make a difference to millions and millions of people out there. Of course, we have a billion plus people already, but why not aim for the next billion as well? And I believe if we were to focus on 4 areas in the coming few months and years, I'm sure that the service providers in the mobile money industry would be as relevant in many of the countries like the existing banking system, and they would play an as important role in making the lives of people much better, and as I keep saying, financially healthier world. What are the 4 aspects I'm talking about? As new and new customers and new customer segments keep coming into the system, the requirements would vary. It's important for service providers to understand the requirements and cater to that as fast as possible. So the ability to be flexible and time to market are 2 areas which from a customer focus would be extremely important. And the ability to ensure we understand these requirements and therefore coming out with services would clearly put the service providers in a better position to capture a significant market. But also, apart from pure P2P or the person-to-person transfers, for example, or cash in and cash out, how do we really focus on various other financial services requirements of customers, be it loans, be it investments? The other term I could call here is saying from moving from financial inclusion to wealth inclusion. So the focus on various services and therefore being flexible and time to market would make a difference. The other points service providers need to focus on are scalability and security. As customers keep coming in and start doing multiple transactions and new services being added, clearly there is going to be a surge in traffic, there is going to be a surge in transactions. Can service providers seamlessly ensure their platforms are scaled? One way to do this is by going the cloud way. This way they can not only increase capacity on demand but also optimize investments. The final point, and I believe this is going to be the most important one, is on security. As the mobile money industry gets mainstream, and in some countries it is expected that they will play a more important role than traditional financial service providers, it is only natural that regulators are going to insist and emphasize on following all compliances and come out with regulations that are specific to the industry. Also, as new customers come in and transactions surge, it is imperative on service providers to have the right controls, be it AML, CFT, or following the right profiling of customers, so that the risk on transactions are minimized and the frauds and inconvenience on customers is something that could be kind of mitigated.